Hello traders and welcome back to the Forex Geek. Today we are exploring the bullish shooting star candlestick pattern, which is a crucial signal for identifying potential bullish reversals in the market. So this pattern can provide you with valuable insights into market sentiment and help you make more informed trading decisions. So throughout this video you will break down how to spot this pattern, understand its significance, the market psychology behind it, and also apply it to your trading strategy. So make sure you watch until the end, as we'll also showcase real chart examples that will enhance your understanding. So without wasting your time, let's get started. Let's start with the pattern identification and characteristics. So the bullish shooting star candlestick pattern is a key indicator of potential market reversals and is particularly significant when it appears at the end of a downtrend. So understanding its formation and characteristic is essential for traders looking to capitalize on bullish reversals. So normally the shooting star is a bearish pattern, just the shooting star. But now what happens when you find it at the end of a downtrend? It is the bullish shooting star candlestick pattern. Some people call it the inverted hammer, but can also call it the bullish shooting star candlestick pattern. So it consists of a small body. The pattern features a small body located at the lower end of the trading range, and this indicates that the opening and closing prices are close together, reflecting indecision in the market between buyers and sellers. And next characteristics is the long upper shadow or the long upper wick. So this standard feature of the bullish shooting star is that long upper shadow or wick, and this should be at least twice the length of the body. And this shadow signifies that buyers push the price higher during the session, but sellers manage to bring it back down towards the close. So the next characteristics is the little to no lower shadow. So there should be little to no lower shadow or wick, and this suggests that the selling pressure was not strong enough to push prices significantly lower after the initial buying surge. So there may be no lower wick, or just very little, like this. So the next characteristics of this pattern is context in a downtrend. So for this pattern to be considered a bullish shooting star, it must appear after a downtrend or pullback. So its presence indicates that the downtrend or pullback momentum might be weakening, and the reversal to the upside could be on the horizon. So let's open the charts and find this pattern. So we were in a downtrend here. Actually, here price was bullish, had this trend line. Let's try to connect this trend line. So looking at this, it's clear that price was actually bullish, and we were supposed to be looking for buys. So we had this pullback. You see price giving us this pullback into this area, into the lower trend line, and now we're expecting a buy from here. So at the end of this, you can see this rejection from this red candle, this bearish candle. Then next we have is the bullish shooting star candlestick pattern, which is this. Now this is an indication that buyers may be stepping into this market. And also after that, you can see it, the hammer candlestick accompanies it with this doji also. So there's this indecision in the market between sellers. And you can see buyers are kind of stepping into the market. If I add my volume indicator, I like to use the volume indicator to confirm this candlestick patterns, because it tells us if buyers are actually stepping into the market. So you can see there's a volume decreasing, and you can see more from here. We're now having more buying volume than selling volume. You see, we're having more selling volumes here, but right here at this area, we started having more buying volumes, and that's another confirmation we could use. You could also use your moving averages or your Fibonacci or your support and resistance levels to confirm the validity of your bullish shooting star candlestick pattern. For example, from this low here to this high, this got to the 78.6% Fibonacci level. So you can see price hardly was almost unable to break through the 61.8% to the 78.6. So we had this consolidation within that range, showing that price might actually be looking to buy. And also the other context is that we are actually at the lower trend line also. So when you see this, all these confirmations, the next thing is to actually enter your buy trade. So another confirmation you can use before you place that buy trade or click that buy button is to look at the next candle. You should wait for confirmation of the bullish shooting star with a subsequent bullish candlestick. So this confirmation indicates that buyers are gaining control and the reversal is more likely to occur. So you should actually wait for a close above a candle close above the high of that bullish shooting star candle. So whenever the candle closes above it, it's an indication that we should be looking to buy. So here the candle finally closed above it, and you set your stop loss below the shooting star candlestick pattern, and your take profit could be at the high, the nearest high or resistance or swing high, or you could just do a 1:1 or 1:2, whichever one is cool with you or anyone you're comfortable with. And that was how we were able to catch this buy trade. Let me look for another example which we can use. You can see price was started giving us this bullish movement after tapping into this support, and we had this pullback before this continuation. But during this pullback, you can see this bullish shooting star candlestick pattern, and after we had that, you can see price closing above it, the high of that candlestick pattern, and after that we started looking for buying opportunities. You could just click the buy. You can also see the volume. Also after this was we had more of a buying volume around this area where we had that bullish shooting star candlestick pattern. So that was a nice indication to buy, and our target could be this swing high right here, and stop loss just below that candlestick pattern. So that was how we were able to catch this trade using the bullish shooting star candlestick pattern. This is another one. We had a pullback after price broke structure to the upside, have this pullback. Now at this pullback, we could use the Fibonacci extension to confirm if this pullback is actually a valid one, and yes, it is. See price having difficulties going below the 61.8% level of the Fibonacci ratio. And if you zoom into this, you're gonna see the series of bullish shooting star candlestick pattern. I have one here, and that's an indication that we should be looking to buy. You have this longer upper wick and small lower wick, and then the small body in the middle. So that is a valid bullish shooting star candle, and so we should be looking to buy. I can see the close of this, the candle close above the high of that bullish shooting star candlestick. So we're looking to buy from there, and a stop loss just below that low, and take profit could be at this swing high or at this resistance here, a smaller resistance. So And that's how we were able to catch that trade with the bullish shooting star candlestick pattern. So advanced strategies you could use should be focusing on major resistance levels. So you look for shooting star to form at focusing on support levels actually. So you look for the shooting star to form at support levels, or such as previous lows or Fibonacci retracement levels. So these areas often attract more buyers into the market, increasing the likelihood of a reversal. So you should also combine with volume to ensure that you are trading in the right direction and trading with the big money players in the market. So that is another one you should pay attention to. You can see enough buying volume. At the same time, we had this candlestick pattern formation, and I don't know if we could see one more example. Okay, look at this. This was a major resistance. Price had retested this level. And we were expecting the buyers to step into this. And now you can see this bullish shooting star candlestick pattern here at that support level. So confirming this with volume, you can see buying volume. The same time we had this. So we're looking for a close above the high of that shooting star candle, the bullish shooting star candle. And as we had it above here, you place your buy, your stop loss just below the low of the bullish shooting star candle, and I'll take profit at resistance levels like this one, or another one like this one here. And that was how we were able to catch this trade. So remember to always take partials and also use trailing stop losses. So it's essential you also place your stop loss orders, and don't be greedy. You could target a 1:1 or a 1:2, or could consider 2 to 3 times of your risk. Yes. So also determine your position size based on your risk tolerance, ensuring you do not risk more than a small percentage of your trading capital on any single trade. So I guess we've covered a lot on how to spot the bullish shooting star candlestick pattern and also use it in your trade. So if you found this video helpful, please give it a thumbs up and subscribe to the channel for more valuable content. Don't forget to turn on the notification bell so you never miss an update. Until next time, happy trading.